The following information and opinions expressed on the Sweet Divorce podcast do not constitute nor are intended to be taken as legal advice. All content is generalized and for informational purposes only. Please contact our legal team or your own attorney for advice specific to your particular case. Thank you.
It's sweet divorce.
Life's sweeter after divorce. Let us help you get there.
Hello and welcome to the Sweet Divorce podcast. I am Rosario Santoyo here with my partner
Gretel Smith.
Today we are joined with our colleague and friend Josh Maxwell from Hone and Maxwell. Hello, Josh. How are you today?
Good. How are you guys?
We are terrific.
Yeah, we're doing great today.
First off, can you tell everybody a little bit about what you do and what your experience is?
Sure. I started my career as a CPA, and then we opened a law firm. So we are a law firm, but I'm a licensed CPA still. So we kind of bridge the gap between compliance and law, but definitely more on the legal side. Our firm handles all domestic controversy, so audits, collections, penalties, people that owe money, basically anything outside of just filing and paying your taxes. And then on the international side, we're a little more full service. We help from the initial planning stage all the way through to if there's any problems. Our most common clients are people who have unreported foreign assets that may need to go through an amnesty program to get things caught up. And we help planning with both inbound and outbound investment on the international side.
Wow, that sounds perfectly complicated.
Yes.
So I'm glad that you're there to help with those types of transactions. We practice in family law. So a lot of times, especially in Southern California, our clients have assets here in both the United States as well as abroad, or particularly in Mexico, here in San Diego. Do you have any advice for those types of clients that have foreign assets and are also dealing with divorce here in the United States?
Yeah, I think it's really important. The very first thing, which is probably the most unglamorous, but the most severe, is to make sure that everything's properly reported. Because if you have foreign bank accounts, foreign businesses, and now you're going to start splitting them up, there's going to be much more documentation about it, much more chances for the IRS to find out about it. And there's really severe penalties for not reporting those offshore assets. So I think the first thing is make sure everything's above board. So that no matter who you move it to, they can start reporting, they can start taking money out or doing whatever they need to do, and there's no problems with possible compliance. And the other thing, I mean, is to consider that it is all of your assets worldwide. So you may need to look at what is the local law. So if you have assets, let's say in Hong Kong, and you have the divorce here, you may need to look for an attorney in Hong Kong that's going to figure out how to split those assets. And I know that because we work it on the other side. So we've handled the tax planning of many divorces where there's U.S. assets. So a foreign law firm will hire us and say, hey, there's U.S. assets. Can you let us know how these need to be split, if there's tax consequences, and what they need to do?
So would you recommend family law clients that may have international assets to retain a tax firm such as yours, along with a family law firm, so that we can work together to make sure that both the domestic assets and the international assets are handled correctly?
Definitely. I think that the first question to ask them is if they have international assets, has all of this been properly reported? Because it's quite a pain to get all that information in and take care of it. So most of the time, if they've been properly reporting it, they know, and they're going to say, yes, I do this form and this form every year, because they're kind of annoyed by it. If they say, well, why would I have to report that? It's a foreign asset, or I think so, then probably not. And then either way, they need to look at it. And a question that comes up a lot as well, just had this miscommunication with a client recently, is that you really need someone who's an expert in each jurisdiction. So, I say I do international tax, but that's really U.S. consequences of international tax and business. So I don't advise on Mexican law or Hong Kong law or Singaporean law. Even though we have an office in Singapore, it's a foreign office, so we can't even practice Singaporean law. We only give U.S. advice. So the people that try to give advice in each jurisdiction, it's kind of the jack of all trades, master of none, and you really want somebody local. But I think the benefit is that we've made those connections, so then I can connect those people, just as the same as the Hong Kong firms hire us to the U.S. side. If I have somebody going through a divorce and there's assets in Singapore, I'd reach out to Singaporean counterparts and ask them what's going on. So the recent one we had was a Hong Kong resident, UK citizen. His wife's a US citizen, UK resident, and their daughter is American. And they're getting divorced and they have US assets. And they were asking me, is there any planning or what should we do? And I told them, well, the first step that's very important is the US citizen wife should get all of the US assets. Because as a foreigner, you only have a $60,000 exemption on US assets. So if he walks away from the divorce with US property, he's going to have to set up some holding structure, which is a bit complex if you already own the asset and you're not setting it up properly. Or if he tries to inherit that to somebody or gift it, he's going to have taxes at about 40% of the value of the property because there's only a $60,000 exemption.
Yeah, wow.
On the other hand, if she takes over all the U.S. assets, then it's just, standard estate planning. It's just U.S. property, and she can set up her estate plan however she wants. The other thing that we're looking at is that once they split up the assets, he's now a foreigner, and gifts from a foreigner to an American are unlimited. There's no tax. It just has to be reported. So if she splits up and takes her assets, then if she wants to set up a trust or do some sort of an estate planning, she would have to use her lifetime exemption to set that up. But if they could agree pre-divorce to say, I'm going to give you X amount of money, why don't I just put it into a trust for the benefit of you and the children? You don't have to use your exemption, and this is technically your money because this is what you wanted it to have happen. Then you could do that. Now, the problem with that is this person is a bit of a high profile person, and the concern is, well, it's all good faith, right? You can't put it into the marital agreement that she's getting that share and he'll put it on the trust on her behalf. Otherwise, the IRS is going to say, all you did was cut out the middleman. That money was supposed to go to her and then go to the trust, and you just cut a check to the trust. But that's still her money. So it's still her exemption that got the money into the trust. So this all has to happen pre-marital settlement agreement where he does that. So what you don't want to have happen is, they're on amazing terms right now, but what if in 3 years from now, she comes back and says, hey, he really screwed me over in the divorce. I was supposed to get X amount of money and he just put it into the trust for the kids to look like the nice guy. And we can't have anything on paper that says otherwise, because then it would be treated as if it was hers all along. So it's a difficult situation. This is a really nice guy. So he's trying to help her where really it's no benefit to him. It makes no difference whether he gives it to her or the trust. So some really interesting issues that come up because our system is so, I guess, strange to a lot of people because of how onerous it is in some aspects. But then in some ways, you can give free gifts to Americans, which seems, well, that's too good to be true. And not to go off on too much of a tangent, but the whole idea behind international tax, if it sounds too good to be true, all of our laws encourage the money to come in and discourage the money to leave. So gifts to an American are unlimited because if somebody from Hong Kong gives me $10 million, well, I'm going to invest that and they're going to collect tax on it. If the Hong Kong guy has it with 10 million, the IRS never touches that. So all the laws are encouraged to come in. And then if you invest abroad, then there's anti-deferral rules and everything that kicks in to discourage you to do that.
That makes so much sense.
It does.
And it's something that I never would have considered because no foreigner is trying to give me anything.
Yeah. But I think it's a really good thing also too, because we don't always think about, the tax consequences in pre-planning for divorce.
Right.
And especially if you do have an international marriage, I think that's you brought up such a great point, is that we really do need to advise our clients, hey, it's time to retain a tax attorney.
Yes.
To plan this together. A lot of times people come to us, we're not dealing with amicable divorces a lot of times. So any advice for people that would be going through a contentious divorce where in a scenario like you were discussing where they're getting along well, what would be a way to protect assets that way or for tax purposes, how to at least or
Again, I think
plan?
Sure. I think a lot of it goes back to reporting. Just it's kind of a low level one, but one of the most commonly audited things is multiple social security numbers between returns. So if there's a divorce where it's very contentious and they both want to claim the kid and they both say, well, I don't care what the agreement says, or I don't care what you say, I'm claiming the kid, that's a really easy way to get divorced when the dependent pops up on both returns. Because the system can just match those social security numbers and say something is going on here. And also, you have to understand that the agreement between you and the divorce does not bind the IRS. It binds the two of you. So if in the divorce, for instance, you say, this person caused all the taxes, so they're going to be responsible for it, and they agree on that in divorce, well, the IRS is going to call both of you. And then you can't say, well, no, here's our agreement. The IRS will say, okay, I'll collect from you. And then you go tell them that they have to pay you back because of the agreement. So the agreements aren't binding on the IRS, and that trips up people a lot because they think they're going through the divorce and it's going to be fine. But especially in California with the community property, creates some very unfavorable situations for the person who didn't cause the tax. So let's say that I was single and I have a whole bunch of tax debt and I get married, it then becomes community property. And then if I get divorced, the IRS will go after both of us. So my wife came in with no tax debt, didn't cause any and left without it, and they will still go after her. And that's something where it would be in the divorce where they'd probably say that was mine or that was my separate property or something. But You guys would know those terms better, but the IRS would just know it's all community because it went in and went out, and so they'll go after both of them equally. And we've even had cases where the husband felt so bad about it, he literally challenged the innocent spouse agreement with a letter saying it was his fault and she shouldn't have to pay anything. And the
Wow.
IRS said, no, she benefited from it. We don't care that you agree and are willing to pay all this. We're going after both of you.
So it's really important to make sure that your paperwork is drawn up correctly, because otherwise government agencies, like you mentioned, aren't going to honor anything that is said by either party. It's based on what's required and what the order says, not the
Right.
order says, but according to their law. So that's a good point.
Yeah.
Post-divorce.
Yeah, I think the
And-
agreements it's really important to have all the correct language in there and make sure that everything is enforceable in court. It's almost like counterintuitive, but make sure you guys can enforce everything without the IRS as opposed to even thinking about them, because that's what it's going to come down to.
Yes.
Right, to make sure that the state court will impose the sanctions on the party that, right.
Right.
Exactly.
I think it's a really good point. What about once we're out of divorce, right? We have our clients, they want to have a new estate plan. What tax advice would you advise or suggest to them to go and do with regards to taxes and planning for their future?
Sure. I mean, I think the basic thing is that everybody needs a living trust if you're in California because of probate. And it's kind of strange for foreigners. And I mean, myself, until I got into this industry, it kind of didn't make any sense because you grow up and you think, well, I have a will, that's enough. And when you have to go through probate, it turns into a mess. And we've had some ones that, got really ugly or took a long time and caused problems. So when clients are coming in, even if they're international clients, so like I said, an international client only gets a $60,000 exemption on US property. So if they want to invest in the US, like stocks or real estate or anything here, they really need to have the proper holding structure, which we can set up so that they avoid the estate tax and can pass it on to their heirs. But sometimes they say, well, I'm young and I'm going to sell it, or I'll think about that later, which doesn't always work. But, sometimes they're just, for whatever reason, don't want to set up the proper holding structure. And what I tell them is at least then get a living trust, because you're going to have all this tax and it's going to be a pain. But why also have the headache of probate on top of all of that?
Yes.
So I mean, I think that it's a simple thing, but anybody with anything in the state of California should have a living trust.
We're going to take a quick break. Sweet Divorce will be right back after these messages.
Need help with your divorce? Not to worry. Here at Burgo Santoyo Smith, we have the answers to all your questions pertaining to court orders, mediation, family law, and healthy co-parenting. Find us at www.bsslegal.com or give us a call at 833-931-1615. That's 833-931-1615. We are here to serve you with several locations in California, from San Diego, Escondido, El Centro, and Monterey, and one location in Swansea, Illinois. Burgo Santoyo Smith. Life's sweeter after divorce. Let us help you get there.
Want more Sweet Divorce? Find us on YouTube, Spotify, Instagram, Facebook, and TikTok at BSS Legal.
Do you have any examples that you can speak of where someone did not have a living trust in place and you saw the tax consequences of that particular estate? Is that something that you can give an example of?
Yeah. Well, it's actually worse than that. We haven't even seen the tax consequences because the probate is not done. And I think it's been 5 or 6 years at this point, because it was a case where it was a person who, they had the whole estate plan in place. And it was a person who thought, well, I'm young and virile, I don't need to sign that yet, and thought he was going to live a long time and didn't. And then it went into, and he had a special needs child with his second wife, and he had 2 older kids with the first wife. And he wanted everything to go for the benefit of the special needs kid and their sibling with the second wife as well that was going to take care of them. So I don't really do probate, but I was just advising on the tax part because I was at the initial step of the trust and some of the tax planning. And as they went through probate, I know there's a place where you kind of have to give notice and disclose, and other heirs can make their claim. And there's a form that the 2 older siblings had to sign off on. And the second wife thought, well, they should just give it to him because that's what they wanted, and signed for them and then sent that back in.
Oh,
Oops.
So their attorney called me and said, there is an issue here. And I said, well, that's not I know I was in on the tax planning, so they knew me. And I said, that's not my thing there. And then I called the client and said, you now need a trust litigator because, you just committed fraud and that's a major problem. They were kind of, kind of shocked, but kind of not surprised. I think they were not surprised that it caused a problem, but surprised at how big of a problem it was.
Yeah.
So, they had about $4 million worth of property in California, and what they wanted to do was just sell it and put it into trust to benefit the special needs child. And now, literally the trust was ready. All he had to do was stop into the bank and sign it. And as you know, the next day they could have went down and changed the title, sold the property, and maybe within a few weeks had that money to fund the trust. And now, as far as I know, that's going on 4 or 5 years of this trust litigation, and I don't think it's been settled.
Wow.
That is
That's
quite the
litigation.
nightmare. So
Yeah.
thank you for that example. If you weren't scared enough to get your estate planning documents in order right away,
Right.
that would probably do it.
Absolutely. And that I think it's just, it's your advice after divorce, get an estate plan.
Yes.
Yeah.
Right.
And
And also
we do a
consult
lot
with
of
a tax attorney.
Right.
I was gonna say we do a lot of international travel, and we always would sign a sheet that would say, if something happens to us, this goes to the kids. And I always knew from law school that probably doesn't work, but it made me feel better. And then talking with people over the years, they're like, yeah, that was basically worthless. And that was kind of a wake up call to us that, yeah, we need to do something as well. And I think like maybe in the back of my mind, it's the same thing where when you're not pushing up against that exemption, especially now with it at 14 million, you think, well, why do I really need a trust? Or if you grow up in a rural small town area like me, and then you see someone's bank account and it's the family trust, you think, oh, so fancy, like you must be super rich that you have to have something like that. And then you understand what probate is and realize, no, even if you have basically nothing, you're creating an enormous pain for your family after.
Yes.
So if you have real property or you have any assets, you should have a trust.
Yes.
Yeah.
Living trust is a good
Living
idea.
trust.
Any final words for us, especially since tax season is about to start? Do you have any final words for our listeners about taxes and preparation?
Yeah, for me, it's really all about reporting. Especially on the international side, but like I said, even on the domestic side, when you're going through, like I said, the double social security numbers or the things like that, to just make sure that everything on your return is done the right way. And I think that sometimes people overlook that and think, well, they're gonna be going after the millionaires, or they're, I'm small fish, people will always say to me. But if you make those kind of mistakes, that doesn't cost the IRS any manpower to have the computer say there's a mistake and send you a penalty.
Right.
And then also, all of the planning you guys do, divorce and estate planning, kind of puts all the cards on the table for multiple agencies, multiple lawyers, multiple people and advisors. So if things are not properly reported, it's going to come out. Now, I don't expect that anyone's going to report that. You have attorney-client privilege, so you're not going to call the IRS and say, "Hey, we just discovered they haven't done this." But there's more threads for somebody to pull at. So then if let's say they weren't reporting that international business, and then they get audited 3 years from now, and the IRS sees the divorce and says, "Did that really not come up during the divorce? Did you not tell them about this international business? Like, now that you didn't tell them and you guys split this off the MSA, this seems like maybe you're trying to hide this. Why would you not come forward and just give them everything?" And so it's for us, I had a client yesterday I had to explain it to because they have several businesses in Mexico, and the father of the family is extremely upset that he's never taken any money from those businesses. And each member of the family is looking at multiple $100,000 penalties just for non-reporting.
Wow.
And I told him with international tax, if you come in and tell me I'm making $5 million a year in Mexico, but I don't have any businesses, it's all in salary, but I was just lazy and didn't file my returns, it's no big deal. We'll just file the returns. You'll pay a 25% tax on the income and probably be done with it. If they thought it was fraud, it could be worse, but generally that's what happens. But if you're making almost no money and you just have a couple dormant businesses, you're looking at almost automatic, really high-end penalties. So it's all with the reporting on my side when you're going through this type of stuff. And then again, on the estate plan for everybody here in California to have that, and then for foreigners owning U.S. Property, really important to have that because not only do you get probate, but you're going to get hit with a 40% tax on the value anything above 60,000.
60,000. That's
Wow.
not very high, especially when you consider the cost of real property here in California. So that's definitely good advice.
Yes.
With that, thank you so much for joining us today, Josh. It has been so enlightening. And if you know of anyone who has any tax or family law issues, please give us a call and we'll have Hone Maxwell's information here as well. Life is sweeter after divorce.
Let us help you get there.
Thank you.
Thank you.
It's